In this video, traders, we're going to look at had enough of trading crypto and are looking to get into stocks. This will help you identify some volatile ones. Stay tuned. Hey traders, very warm welcome to you. So you've been trading crypto, you're used to the big swings in Bitcoin, Ethereum, all the other ones, and you want to kind of diversify a bit. You don't really fancy currency, you don't fancy commodities, indices aren't floating your boat. The big stocks like Apple, Tesla, Facebook, Amazon, Google, etc. aren't really doing it for you. So what do? You can screen for really volatile stocks and stocks that are moving 10, 20, 30, 40, 100, 200, 500%. Not as common as 500% ones, but some seriously big moves. How do you do it? Let me show you in this video. Okay, first step is you go to a screening tool called finviz.com, finviz.com. There are others out there that do a similar thing, but this is a really good tool and it's free for what we're using for in this video. What we're trying to do is we are trying to screen for the most volatile stocks by using some parameters. And one of the parameters we can try, which is a really good one, is to screen for stocks that are greater than 40% above or below your 20 period moving average. I'm not going to go through what a moving average is here. Guys, you can kind of see some of my videos on that. That might be price. The moving average be doing this. Price will suddenly have to spike right up to get a significant distance away from the moving average. You may have used moving average in cryptos anyway, so I probably don't need to be telling you this, but this just means that, hey, if price is really afar from a 20 period, and 20 periods only 20 days, it means very recently stuff has kicked off big time, for want of a better word. So you're going into your screening tab, you're pressing screening, you're selecting oil, and then whichever kind of screening you're using, Finviz is a good one for it, like I say. Anything above 40% above the moving average or 40% below is going to give you a decent little basket of stocks that are moving aggressively. Another one to do if you're looking for stocks to trade intraday, perhaps you're a day trader from Bitcoin, intraday trader for Bitcoin, one that you could do is you can screen for stocks that have gapped up or down greater than 10% on the day. So perhaps in the morning after the kind of dust has settled, and bearing in mind you might have a delayed feed on this if you haven't got a premium version, but there are ways of other things you can do, but what you're effectively looking for is stuff that has gapped up. Now, for a stock to gap up, it means that overnight there must have been significant news for it, especially if it's to gap up more than 10% or to gap down more than 10%. A gap is the difference between the close and the open. If a stock is moving and is repriced more than 10%, it means that they've either had some earnings, they've had some good news, they've had some bad news overnight. Just like in crypto, you know, when something comes out, the market will move aggressively, but if it's closed, the next time it opens, it's going to be priced accordingly. So that's going to tell you intraday which stocks are gapping, which stocks are aggressive, which stocks are moving. This first one is going to tell you stuff that has been moving recently, and you might be able to find a second leg, a second wave, some momentum, dig into the news flow, find out what's causing it, and then take a position based on that. This is going to cause you to find stuff very early on that's moved. Sometimes you might get a gap that doesn't do anything afterwards, but sometimes it might be the start of a really hefty big move. Okay, the final thing to add here is add a filter on the average volume or current volume, or relative volume is something else you can do, but average volume is a good one, of greater than 500k shares a day. Because a lot of these that come up in here, you'll get probably a dozen or more. A lot of them will have very low volume. You don't want to be caught out in low volume stuff. You need something that's got some decent volume behind it, because you don't want to be a big player in a small pond, because you might get stuck in something you don't want to be in. Whereas this greater than 500k volume should have enough volume that you can have a nice tight spread on it, not much of a cost to trade it, getting in and out of the reasonable size. And also if you add that to the volatility, you've got yourself a nice little candidate for potential trades. So that's a good way, guys, of screening stuff. There are other ways of doing it. You can have monthly performance over 10% on the month. That's normally quite good. There are other ways that you can, other moving averages you can use. I prefer the 20 period because I think it's the closest one. People sometimes use a 50 or 100, but sometimes markets move quite a way away from the 100. Now, aren't that volatile? What you're looking for, if you're a crypto trader, you're looking for volatility, you're looking for aggressive moves, you're looking for price spikes, you're looking for serious supply-demand imbalances, and this will identify them for you. Then you can look at the charts, you can analyze it, and you can decide whether you want to play in those or not. All right, guys, whatever you're doing, keep that risk managed. I'll see you in the next one. Best of luck. Goodbye.